In agribusiness, another record day for the Dow Jones Industrial Average. Monday, Wall Street set new milestones. The Dow Jones crossed 16,000 for the first time ever before settling lower. The Standard & Poor's Index also marched past 1,800. It also finished lower. Stocks have been on the rise in 2013 as companies report strong earnings and the Federal Reserve keeps up its easy money policies.
When you put it all together, couple that with the fact that it's a strong seasonal time of year, there's a lot of momentum in the market right now. The path of least resistance is higher. Having said that, we're very overbought and, wouldn't be surprised to see some profit taking over the very near term.
With corn prices down nearly 40% this year alone, 2014 is likely to require a keen eye on margins. Farm Director Al Pell discusses that from an inputs perspective in this morning's analysis. Al?
Bryce Knorr, who is the senior editor of Farm Futures Magazine. Bryce, I'd like to ask you a question about some major inputs that farmers are going to have to be thinking about at this point in time, and maybe even when to buy, not where, but fuel and also fertilizer.
Well, that's probably the good news as we start looking at 2014 is that fertilizer costs are definitely lower, and it looks like fuel costs will also be a little bit cheaper as well. But farmers, spend a lot of time watching the grain markets to see how prices for the products are going to sell. They also need to start watching markets for the inputs that they buy. A little more difficult to do, but by talking to their suppliers and doing some research, they can do that. Now, we've seen the price of fertilizers come down 20–25%, should cut the cost of growing corn for the typical producer by $25 to $30 an acre, so a very significant savings. Soybeans, wheat be less, but still probably reduce costs by 10 to 15%. We've seen some good buying opportunities. Certainly the guys who bought fertilizer this fall for the fall application season paid a much lower price than they did for the 2013 crop. Typically the best time to buy fertilizer is in the January, February time period, but the prices have already fallen significantly, so you probably won't get a whole lot cheaper.
So as fertilizer as well as fuel, you kind of look at when you can and see if you can't lock in those best prices, right?
Right, exactly. And typically you can do that in the cash market. There are also swaps traded for that.
Oh, really?
So it's similar to a futures market, but most futures brokers are familiar with those. So if you're a large enough producer, you can do that as well. We've seen some very good buying opportunities in diesel fuel. Normally we wouldn't get those until that January, February time period, but we're down 30–40 cents on the wholesale market. So that's a good place to get started.
So the thing of it is you got to pay attention just as much as you do in order to make sure that you get a good stand and a good crop. Pay attention to your inputs, and that can get you better margin.
Right, and then the same way farmers sell, you don't sell your entire crop at once. When you buy inputs, you buy them in stages and you scale into it, so that way you're not all right or all wrong either.
Okay, thank you very much. We've been talking with Bryce Knorr here on Ag Day. Back with more in a moment.
Ag Day, brought to you by Ag Explore. Nurse your soil back to health with the right prescription of Endzone and Prevent.